was the final or the deciding match of a rugby championship.
All right. Good morning, everyone. Let's get going here. Okay. U.S. markets kind of had a bit of a sideways session yesterday. You can see they're kind of hovering around flatline. We never were down more than 5 or 6 points on the S&P. Never really up more than a couple points either. You can see on the right there that sectors were more or less mixed across the board, with the bulk of them being down. We did have the ISM non-manufacturing number that came in well above 50. If I'm not mistaken, the actual value number of that was I'm thinking of factory orders. So that missed expectations. But then the factory orders number came in, and the actual value on the factory orders number was the highest on record in the States. So I think that's somewhat important, obviously, that we're kind of getting to those sort of levels in terms of production there in the States is very bullish for the U.S. economy, but mixed overall on the day. Asian action, we saw a little bit of a mixed session as well. Shanghai was up a little bit, a couple hours ago. Now we moved to the downside. You can see Hang Seng and the Kospi were up. Also, we saw Australia that was up earlier. Now it's down only 8 points on the day. So we're really just kind of seeing a bit of a drift around, waiting for a little bit of leadership to start the new year, but very little, in terms of leadership that we're looking at the moment. We did some banking stocks that were under pressure in China. Same sort of thing. We kind of see crackdowns on the shadow banking sector. There's a lot of underground lending that's apparently taking place there. You've seen that in the interbank lending market. The rates have continued to rise up because people are nervous of a lot of the loans that aren't being reflected properly on the balance sheet, so they don't really want to lend to the other financial institutions. So we're going to have to monitor that really closely. I actually see that as one of the biggest potential issues that could come in 2014. Could obviously cause an immense crisis if things were to get out of control. The one thing I think that is the saving grace is that most of the banks there are actually owned or partially owned or backed in part by the government. So that's the one thing that I think kind of gives it a little bit of a safety net. All right, very little on corporate action today, but we did have Samsung that was out overnight. There was a miss on the operating profit as well as a miss on the sales number. Actually, quite a significant miss. I do think that they would have had a big negative impact, if I'm not mistaken, on the currency. I'm just speculating on that. I haven't read anything about that, but I'm pretty sure that you have seen Korean won that has strengthened against a lot of its peers. So probably, but obviously it wouldn't be as much as that. I mean, we're talking about a miss on 20% on the numbers, on profit numbers and on sales numbers. So that's whether it's being those earnings are being stolen by its competitors, or whether we're just starting to see a slowdown in the tech industry. We'll have to see when we start to get some of the earnings from the likes of Apple and Microsoft and some of the others. All right. Market data out today. We've got German retail sales at the open. We've got French consumer confidence. We've got German unemployment change and unemployment rate. And we've also got European CPI year-on-year across the board. I think that's one to focus on. We've got, and then the CPI estimate. So at 12 o'clock, I think that could definitely potentially move markets a little bit. Specifically look for big movements in the euro. If that number comes out a little bit weak, I really think that we're kind of at a point right now where the euro where the dollar can rally against the euro if we get some sort of data like that. And then the last thing is the trade balance in the States. All right, let's jump into the maps. Okay. The first thing that we're going to look at here is Barclays Group. There's a couple worrying formations that are kind of coming here, and some of these stocks that have really been underperforming and lagging. You really, we've obviously, you can see we've had this downtrend kind of moving here downward the whole time over the past 2 or 3 months, and then we get what really looks kind of like a bear flag, just popping up here for a short-term bounce, and then you can see we've dropped out of support on this little this little reversal. So I think that that's definitely worrying. It's bearish. To me it looks somewhat likely that we could come down here and test the recent lows, which are around 126 on a closing basis. And so just be careful out there with these things. I know a lot of stale longs out there. A lot of people really waiting for a real bounce. Not to say it's not going to bottom out and maybe put some time and consolidate here, but the pattern's not looking great. We really failed, as you can see here, at 35. Which was a major breakdown that happened there. Obviously gave some more credence to this level as we came up and tested it. We bounced up here, tested it again a few sessions ago, and failed it. Now we're dropping support on this bear flag. So just be careful out there. These things, some of the stocks that have been under real pressure, wouldn't be surprised to see them continue to be under pressure in the next little while. MTN, which has been one of the stars of the show, obviously, you can see here finally making a little bit of a reversal out of what we've seen as a huge, sorry, that was a bit of a bad line, it's supposed to be right at 205, a huge bounce off of the sort of 191, 193 level. You can see we're making a significant pullback here. And I think that this thing's going to need to pull back and maybe even come all the way back to around 205-ish, maybe as low as 203 and test support. I'm not saying it's going to happen, but for the guys that are looking to buy strong stocks, looking to buy things into pullbacks, this would be a nice one probably to get long of around those levels, somewhere between 203 and 205 would be a nice entry in MTN on the long side. All right, Imperial. Imperial has been also in a bit of a downtrend going all the way back to October, obviously affected negatively quite a bit by the weak rand. This one's also putting in a bit of a bear flag here, and I wouldn't be surprised to see this thing come down and test, the lows of, call it the lows of the year, closing lows of the year, which are not very far off, maybe 7 or 8 rand away from here. So. All right, Sunlum is one of the ones that I think is another one that's a great buy on pullback setup here. I love this flag. It's so defined. It's so look at how symmetrical all the lines are here and how nicely how many times we touched either side. It really is a nice setup to me technically. We're looking for a pullback close to 50, which we only bought them maybe around 49 before, but I think closer to $50. I really like the buy on this thing to push back up to all-time highs in Sunlum. And then now we're going to jump into a couple on the retail front. Retail's really starting to look ugly for us here. Let's actually start with this one because this is the only bullish chart really on retail. I don't know if a lot of people are short of this thing, and it's kind of caused a bit of a short squeeze. This and maybe Pick and Pay are the only two that are really looking quite bullish. I think SPAR is also looking pretty solid. But you can see here 158 is a very big level for us in Mr. Price. We came down and we wicked down to it intraday. We managed to close above 160. If we drop 158, then I'll be looking for a move down to 105 here, and if we can drop 105, then I think that this thing can start to really correct with some of the other retailers. So just watch it closely. I mean, it could be a great little support play, but I think it's interesting to measure it versus its peers because it's just traded so differently, and I think it's going to be important to watch that because if that thing starts to get offered, then the others are probably going to also continue to be offered. All right, this is quite ugly. We're looking at Trueworths here. The reason why I think this is so significantly ugly is because if you really look there, I mean, we're looking at going all the way back to what day is this? We dropped below. This is this December 11th. We really dropped below about $78 on December 11th, and haven't been able to get above $78. Besides maybe a blip, there at the beginning of the day. For that entire move. I mean, we're looking at almost a month now of consolidation. This thing consolidated right above its lows of the year. I think it's close to 2-year lows, if I'm not mistaken. Yeah, it is 2-year lows, in fact. Let's actually jump back a little bit further. Let's look at a 5-year. Okay, so you can see it's 2-year lows on this number. To me, this is taking out a huge level. This thing did pop up to $100 the other day. If we were on the target on this technically, I mean, it's stupidly low levels. It's around $50. Sorry, but around 50 rand. So In fact, it would be exactly 52 Rand. So this chart looks really, really, really bad, to say the least, technically. Just keep that in mind. We're looking at the exact same type of thing in Foschini. We're going to look at this on a 2-year as well. Foschini, I actually think that Foschini dropped the bottom here, if you ask my opinion. That's where I think Foschini dropped out, which is close to $100, and then we came back up and tested it. So if we're running that from, let's say, 100, let's take this from 117, we'd be looking for a target of 83 Rand, which is a hell of a long ways down from here. It's about 10% down from here. But you can also look at it, if you were to, take it from just taking out the lows, and you look at a kind of a continuation pattern on bearish move, we're looking all the way down at, I don't know, call it 67 Rand, I think, the target would be. So either way you look at it, the target in Truworths and Foschini is really ugly. To me, they're the two most bearish charts on the board. They don't seem to bounce. I don't think anybody wants to freaking own these things. Guys are probably getting just stopped out on longs. So just be really careful if you're playing those sectors. I don't think there's any excuse technically to be long of these things. Fundamentally, I have nothing to speak for, but technically they're looking ugly, and just be careful if you're playing on the long side of those. And that's it for today, guys. Thanks a lot.